Is Rocket Lab's stock a hidden bargain or is it a dangerous bull trap? The charts are flashing clear sell signals and the downward trend is hard to ignore. Yet some of the smartest contrarian investors are quietly calling it massively undervalued right now. Who is right and where is the smart money actually moving? To understand what is happening, we have to look at what Rocket Lab actually does. This is a premier force in the global aerospace and space infrastructure ecosystem, specializing in end-to-end launch services, satellite manufacturing, and space systems management. They build and fly the Electron launch vehicle, develop the massive new Neutron rocket, and manufacture advanced spacecraft components for both commercial and government constellations. When global aerospace demand and space hardware deployment expand, Rocket Lab booms. When capital expenditures or government launch contracts face delays, it hits them first. Right now, this stock is heavily in focus because it serves as an ultimate health check for the entire private space economy, satellite internet infrastructure, and high-growth aerospace valuations. Before we dive into these critical chart levels, make sure to like this video, subscribe to the channel, and drop a comment below with your current strategy. Are you buying this dip or are you sitting on your hands? Seriously? Leave a comment right now. It helps the algorithm push this out to more traders. Let us pull up the charts and look at the raw technical analysis. The immediate trend direction is showing clear, consecutive lower highs and lower lows. We are seeing immediate short-term weakness as the price tests a major horizontal support level. If this current support zone breaks, the next major downside target opens up significantly lower, creating a vacuum that could accelerate selling pressure. On the flip side, momentum indicators like the relative strength index are hovering right on the edge of oversold territory. This tells us that while the sellers are firmly in control, the downward move is getting extended. Key resistance sits just above the recent breakdown point. Any relief rally is highly likely to face heavy selling pressure at that resistance line unless we see a massive spike in buying volume. When you look at Wall Street ratings and the broader institutional signals, the picture looks incredibly cautious. A significant number of consensus analysts have recently downgraded their outlook, shifting their ratings toward hold, sell, or even strong sell. The prevailing short-term outlook is dominated by negative signals, primarily driven by launch window delays, heavy research costs for new launch systems, and general sector compression among speculative tech equities. This institutional pessimism is putting a heavy cap on any short-term upside potential, leaving retail traders to fight against a massive wall of corporate sell orders. This brings us to the ultimate debate. Is Rocket Lab genuinely undervalued, or is this a classic value trap? The fundamental bulls argue that the company's price-to-sales ratio has dropped to historic lows compared to its long-term average, making it an absolute steal for a company with such a massive contract backlog and an irreplaceable position in space logistics. They see a massive margin of safety built on unavoidable long-term space exploration demands. But the bear counter argument is that traditional valuation metrics are completely deceptive at the top of a hyper-extended tech and growth cycle. If earnings are delayed because heavy development costs eat up revenue or launch schedules slide, then a lower price today just means the stock is going to look much more expensive tomorrow. That is exactly how retail traders get trapped. They buy what looks cheap on paper, completely ignoring the massive operational capital expenditures required to reach profitability. The downside risks here are very real, and the volatility is starting to expand. Rocket Lab is heavily tied to the high-stakes execution of regular orbital launches, meaning its revenues are incredibly sensitive to regulatory flight clearances, technological development delays, and hardware anomalies. If a mission encounters issues or the next rocket launch slides on the calendar, profit margins shrink rapidly. For retail traders, the risk is getting caught trying to catch a falling knife. Volatility shakes people out of their positions, forcing stop losses to trigger right before potential turning points. Let us map out the official bull versus bear case so you can see how this plays out. In the absolute best-case bull scenario, we see a surprise stabilization in high-growth equities and a flawless accelerated series of orbital launches, prompting a sharp short-term short squeeze. Buyers step in at current support, volume spikes, and the stock invalidates the sell signals by reclaiming its moving averages, opening the door for a steady recovery back toward previous highs. In the worst-case bear scenario, the current support level completely snaps on heavy volume. This triggers an automated wave of algorithmic selling, confirming a continuation lower and driving the price down to major multi-year psychological support floors before any real accumulation begins. Looking at the outlook, the short-term perspective remains incredibly cloudy and heavily skewed to the downside due to these persistent technical sell signals. However, the long-term perspective reminds us that orbital logistics, satellite constellations, and global space infrastructure demand never permanently disappear. Eventually, cycles turn and dominant market leaders recover. But that leaves us with the ultimate question for the days ahead. Are we watching the final capitulation before a massive historic rebound, or is this just the quiet beginning of a much deeper structural collapse?